Well, the government said that it could create jobs by using the stimulus plan to spur infrastructure improvements. As we've seen, though, the money has been very slow to trickle down, and job growth has been lagging. So should we look more to private money, both domestic and maybe foreign, to better stimulate infrastructure jobs? John Schmidt is a partner at Meyer Brown and joins us now from Chicago, where, John, they know a little bit about infrastructure and private capital, given all the investments from Spain and Australia in your Skyway. Do you think that that's going to increase jobs, though, long term?
Well, I think it can. It depends partly how that money is spent. And probably the best example is what happened in our neighboring state, Indiana, which leased the Indiana Toll Road for $3.8 billion to that same Spanish-Australian team that had earlier leased the Skyway here in Chicago. They took that entire $3.8 billion, put it into a statewide transportation infrastructure program that is, in fact, generating jobs and construction activity all across the state of Indiana. It's the kind of program no other state has, and they did it without having to raise tax revenue or rely on tax revenue, but by using the private capital that came in through that long-term partnership arrangement on the Indiana Toll Road.
I want to get to more on the foreign capital in just a bit, but domestically, do you believe there is enough domestic capital right now accessible and ready to be put to work on U.S. infrastructure assets to create those jobs?
Well, I think that there are U.S. funding sources, major U.S. public pension funds that have announced their interest in investing in U.S. infrastructure. I think the only way we can do it, though, is to draw on private capital sources. If you look at the stimulus bill that was passed, although it was a huge bill, only about $40 billion of that went into infrastructure. There's about $185 billion of identifiable infrastructure funds, commitments from foreign and domestic public pension funds and other investors that wants to come into U.S. infrastructure. If we can get that $185 billion, and that's equity, add to it additional financing, we're talking about financing that really dwarfs anything that has been coming out of the federal government, even under the stimulus bill.
Aside from that, we've talked a lot, and this sort of the focus of this 2-hour program today is going to be about the weaker U.S. dollar. You got your Skyway in Chicago, the Indiana Toll Road, the Pocahontas Parkway in Virginia. Even the New Jersey Turnpike has been sort of rumored and speculated to have been quietly up for sale for the last couple of years. Will we see a sort of 1980s-like grab of U.S. assets, given how weak the U.S. dollar is?
You know, I think the dollar has some impact on it, but we've been seeing these transactions for a while. The Skyway transaction was done almost 5 years ago, the Indiana Toll Road 4 years ago. I don't think that the currency fluctuations are a central factor. These are long-term investments. They involve a long-term commitment of additional capital into the U.S. So an investor who's making this kind of an investment really can't rely on the current value of the U.S. currency. It helps, but I don't think that's a major factor. I think the fundamental value of the U.S. Investments of this kind is their predictability and their stability. The United States economy, whatever else you may say about it, is clearly the strongest, most stable economy in the world, and I think people who invest in these kinds of assets who haven't been able to invest in the U.S. look at U.S. assets like a toll road or an airport. We're in the process here in Chicago of privatizing Midway Airport, and they say these are the best infrastructure assets in the world. I think you make a good argument that the basic infrastructure of the U.S. economy is one of the best, if not the best, long-term investments in the world, and that's true regardless of any short-term fluctuations in value.
Yeah, and are these good long-term investments, not only from a cash flow perspective, which I believe, John, is what you're getting at? You know, toll roads will generate sort of, you know, stable cash over their life, with caps, by the way, on how high tolls can go, so people can calm down a bit about that. But are they good? Are they GDP enhancers? Do they add to overall productivity? That's the argument right behind high-speed rail. They say, yeah, you know, it's expensive, but if you can get productive people to where they can be more productive faster, it's a gain on your investment. Do you believe that?
I do believe that, and I also think if you can get productive capital where it is most needed. We don't need public capital today in assets like the Chicago Skyway or the Indiana Toll Road. We needed it once in order to build them. But these are existing revenue-generating assets. They have a very large equity value that has been built up over the years. Where Indiana needs investment, where Chicago needs investment, is in other infrastructure. So to the extent we can realize the value of existing revenue-generating assets and then redeploy that capital to places where it will be more productive, that's where I think we get the really long-term benefit to the productivity of the U.S. economy.
John Schmidt, we appreciate your insight and time here today on Fox Business. Good stuff. We'll see you again soon, I hope, sir. Thank you.
Thank you.